We have on board with us Nithin Kamath, the founder and CEO at Zerodha, joining in on the show. Quite a few points. The fact that brokerages have been banned from third-party client security pledges, severe wealth erosion in listed US brokerages is what we've seen. The race to zero, can Indian brokerages really survive amongst this competitive environment? And of course, Zerodha has always been maintaining that they're the sole domestic player who's following the low-fee model. So let's discuss and take these points forward. Nithin Kamath joins in on the show. Nithin, hi, morning. Just the points that I was just highlighting, the key limiting factors because of the new regulations which have been put in place. How do you think they're going to impact the domestic brokerage industry per se? The fact that brokerages can now only lend as much as their own capital. They could pledge unpledged securities to raise funds. All these restrictions that have now been imposed.
Right. I think that it's firstly, hi, Aisha. I think it is it's going to have like a big impact on the traditional brokers per se. So the new age modern ones haven't really been doing margin funding as much, but the people who've been around in the ecosystem for a long period of time, they have traditionally grown their business using margin funding and leveraging securities and etc. So I think they will be impacted over the next few months. There aren't too many big listed players in this space to track the financials, how they will get listed. They'll get affected, but they will be significantly impacted, I think. So.
But just to probe deeper into this, Nithin, will the new norms also impact traders? And if so, how much incremental margins will they now need to provide, and how much less leverage will they be able to obtain because of that?
Yeah, traders will definitely get impacted eventually. So it all depends on how deep the balance sheet is of the broker, right? So slowly, I think the traditional brokers will kind of start cutting down on the leverage they offer to the customers, because for them to offer the leverage, they need to have that much. Their balance sheet has to be a certain size. So I think traders eventually will get affected. Now, it necessarily isn't really bad for the ecosystem, because leverages are usually the ones which end up giving you those sharp spike downs and etc. So lesser leverage is not really bad for the industry in the longer term, but near term, I think it'll end up affecting the brokerage income, the margin funding income for a lot of the traditional players.
That would also impact then trading volumes, I'm guessing, especially in options markets where the leverage is much higher.
Not really options, because see, in options you have to put the premium that you use to purchase an option. That cannot be used through the margin funding route. So see, there are two things here, right? One is margin funding for buying equity stocks, right? Which is what is going to get affected the most here. Which is if I have 1 lakh rupees of stocks, until now I could potentially buy 5 lakh rupees of stocks or 4 lakh rupees of stocks with it, and then the remaining 3 lakhs or 4 lakhs would have been funded by the broker. That will stop. I think that kind of leverages will reduce significantly. Now, on the futures and options side, broker could never fund the customer, right? Because that rule has been there right from the day futures and options got introduced, that the entire margin has to come from the customer. Now, so the futures and options side wouldn't get affected. This will essentially affect the delivery volumes, the equity delivery volumes on the exchange.
How are the norms different to that in the US, Nithin? Will the Indian brokerage business model be able to sustain zero fees with the new regulations coming into effect?
No, the blog post that I had written, it kind of went quite viral. The thing is, if you want to go zero, in terms of brokerage revenue, you need to have other ways to kind of generate revenue as a business. In the new age, a startup ecosystem world, you don't even need to really generate revenues to have a business, right? So you could potentially just raise equity, so go out and raise money and say that you're growing the business and you will eventually make revenue in some form. But to generate revenue, you need to kind of have some other forms of generating revenue. Now, in the US, the brokers have a lot more different ways in which they can kind of generate revenues, whereas in India, it's kind of limited. So like someone like us as Zerodha, we don't charge revenues on equity delivery, but we do charge 20 rupees a trade on futures and options and intraday trades. And that's how we are able to kind of generate revenue as a business and sustain. Now, if you had to let go everything and go to zero, there isn't really a business to do anymore tomorrow. So unlike in the US, where you can generate revenues in multiple forms. Right from payment for order flow, which is I mean, I think SEBI has done a great job in kind of not allowing that to happen in India, which is when an order is placed from the customer, a broker in the US can actually make money out of the order flow itself, right? Now, float income, which is money, interest earned out of money which is sitting idle on client accounts. That in India we have a quarterly settlement rule. There isn't one in the US, so so brokers generate significant amount of revenue out of out of the float income. Securities lending, which in India securities are held by the customer, whereas in the US it's actually held in the street name of the broker. So brokers can lend securities which belong to the customer and make money. In India, you cannot do that. And again, this whole margin funding rule that's been put into place now limits how much a broker can actually generate out of funding. So assuming as a business, say I have 100 crore rupees with me of my own capital, I can at the max generate say 10% on this or 10 crores out of this. Right? Earlier, you could with this 100 crores, you could leverage up to say 400, 500 crores and kind of generate a lot more income, which isn't possible today. With this new norms, So.
Okay, how many additional customers or revenues will be needed to sort of added in order to offset the losses sustained as a result as well of the new regime?
See, in India, I mean, like if everything went to zero, I mean, there isn't other way to make money. So so you can't really add more customer and generate a revenue. So someone like us, we could let go of brokerage on equity delivery because we generate so much more in terms of intraday and delivery based brokerage, but sorry, intraday and futures and options brokerage. But as I said, I think India, the big problem in India is the markets are extremely shallow. So today we have, I think, 6 to 7 million unique investors in the country. People who have invested once a year in the full year. Now, for us, for the ecosystem to grow, I think this number has to become a lot bigger. I think India needs at least 20 to 25 million actively participating Indians in the capital markets to have like 4 or 5 Zerodha kind of players where we charge extremely low cost and we still somehow manage to survive making some money as a business as well, right? So the market has to go 3-4 times in size. Now the problem for the market to grow in 3-4 times in size is that I think India is missing an advisory ecosystem. Because in India what happens is most people who end up trading and investing in the markets, they don't really have a background of trading and investing, so they end up making mistakes. I mean, there are people who sell tips and buy above this, sell below this, but those really don't help grow the ecosystem. You need like a professional advisory ecosystem, which is missing in India. And I think regulators are doing a great job in pushing the RIA business, but I think what is the need of the hour is to find ways for RIA to generate revenue as well, because today, for an investment advisor to charge his fees to the customer, he has to go back to the customer end of every month and charge bill him and charge some money for it. It's extremely tough. So I think in the US the beautiful thing is that a broker can actually collect advisory fees on behalf of an advisor and kind of pay the advisor from the customer. I think India needs a model something like that which allows advisors to easily bill and charge customers some money, and and then that money kind of goes through a non-friction kind of a route, which is from the broker to the advisor and not really from the customer to the advisor. So.
Nithin, just to develop on one of the other factors, the frequency of these technology glitches as well as increased. There's been a lot of anguish among customers. Do they have any sort of business continuity planning servers that's automated that can, result to assuage some of these concerns, or any alternate solution that you work with in case the system goes down, a traditional pickup and phone and trade?
No, I mean, see that it's it's as a tech, today most brokers are actually more technology companies than actually brokers, because most of the trading today is happening online, and in any technology business, downtimes do happen. Now, in a brokerage business, we're kind of relying on multiple factors to remain up all the time, which is right from your leads line activity to the exchanges, the data center infrastructure, and all of that. So there are, I mean, every broker has a continuity plan, but the issue is, most of our business is concentrated in 6 to 6.5 hours. And if something were to go down, just to bring something back up can take like 15, 20 minutes, 30 minutes. And in the business of, in the trading business, you can't afford to be down 15, 20, 30 minutes, right? So it's, I think, we are all building newer ways to kind of have
Nithin,
business
Nithin, the problem is that these technical glitches happen a little too often. So just wanted to understand whether or not there's been an inquiry by the regulator, because one was picking up some chatter around this on the system glitches that you've been facing.
Yeah, I mean, it's just not us. As I said, it's happened at multiple levels. When it happens at Zerodha, we are so big today in terms of the number of people.
An inquiry by the regulator? You're agreeing to that?
No, of course. No, it's not an inquiry by the regulator. The exchange is always, so anytime anything is down, we are always asked what happened. What was the reason behind it? What's the fix? So we proactively actually go out and explain. So we actually put out blog posts, etc. Before even anyone asks us, we tell what is the reason and what is that we have done to fix it. And that's what regulators want to know about as well. So, but I've heard the news about having some penalties going forward, but nothing that we have been told directly yet. So.
All right, Nithin, we'll leave it there. Thanks so much for joining us this morning.
Thanks.